One thing still hanging over the China trade talks is the debate over the yuan. Today, the Chinese currency hit the lowest point to the dollar in more than 11 years. Less optimistic market analysts fear this could be the beginning of a currency war. But trade talks between the U.S. and China are expected to resume next month here in Washington. Now, to learn more about this, we turn to Brent Wilsey, president of Wilsey Asset Management. Brent, thank you so much for joining us today. Now,
Sure.
China's yuan, it fell to an 11-year low. Can you tell us why this is such a big deal?
Well, it's a big deal because what it does, it actually makes their exports less expensive. Kind of balances the tariffs we put on there, because the reason we put the tariffs is to make their products more expensive. Well, if they keep reducing the value of their currency, that makes their products less expensive, kind of wiping out the tariffs, almost a no-sum gain.
Like you're saying, Brent, the People's Bank of China have allowed the yuan to depreciate to offset U.S. tariffs. Experts say a lower yuan, it makes Chinese exports relatively cheaper. But is this the right course of action that China should be taking?
Well, it's really the only course they have, because we, export from them about 500 billion. From us, I believe it's like 130 billion. So they don't have a lot of tools to play with. We do, because we can say, no, we're going to put tariffs on the $550 billion of products, which we pretty much have done or will do here. But they don't have much to deal with. And by dealing with the currency, every day the People's Bank of China actually sends that currency. They know what they're doing. They're saying they're not setting it, but they are. That's the only tool they have to deal with. And their economy, by the way, is not that strong. I was just reading a report that their debt is way high on the government, also on the consumer, and also, too, businesses are leaving China, which is a big problem for them.
Now, both U.S. officials and Chinese officials are slated to meet next month in Washington to negotiate and possibly come to some sort of an agreement to stop this trade war. Brent, what do you think will be discussed? And given that no deal was reached during a meeting between both parties in July, do you think we could see the same outcome here?
Well, I think China is playing a waiting game, and every time they wait, as I said, businesses are leaving China, and they're not going to come back. President Trump is not in that much of a hurry, because he's not in a hurry, and never should be in a hurry to make a bad deal. People keep pushing. Let's make a deal. Let's make a deal. No, let's not make a bad deal, because we're losing $500 billion a year of our dollars going to them. And you take that by 10 years, 20 years. Think of the trillions and trillions of dollars leaving our country. It would devastate us down the road. So we have to draw a line in the sand now. We're not going to do this. We need true free trade. That means you don't put tariffs on us, we'll not put tariffs on you. So let's do a free trade here, and that's what President Trump is waiting for, is a true good trade agreement with China.
Brent, now, given China's economy, for 12 weeks now in Hong Kong, residents, they've been protesting over an extradition bill that would send suspected criminals to mainland China. At this time, the bill is suspended. However, protests continue as Hong Kong residents want the bill withdrawn. China has blamed the U.S., saying America has incited the protests. Now, what impact are these protests having on the U.S.-China trade war and China's economy?
Well, it does kind of divert China's attention from just dealing with us on the trade. Now they're trying to deal with Hong Kong, and they want Hong Kong because that's a great economy, which they would probably destroy if they took it over. But they see all this money coming in, all these businesses that are there working because it is a free economy. And they have, two different systems, one government, two different systems. They would change that. I believe that the agreement doesn't come to an end until like 2047. But they're trying to increase it quickly. But it really does detract them from the trade talks to try to deal with Hong Kong. And I think until we see these protests die down, they've got to deal with that. And I do not believe it. I've not seen anything that says that China's inciting this. And we have to remember too, China is a communist country. They can say whatever they want. Their papers, they run the papers, they run the media, so they can say whatever they want, and no one checks or verifies like they do here in the U.S.
All right, Brent, we have about 20 seconds left. Real quick, what's the worst case scenario if this U.S.-China trade war doesn't end anytime soon?
Worst case scenario, we go from a growth on our GDP from 2.2 to 2.3, maybe down to 1%. I do not believe we'll have a recession. A recession is 2 consecutive quarters of negative GDP. I don't see that. We see a slowdown in our growth. And I was reading a report from GM. GM says second half can be better than the first half. They're doing very well. So American business is doing well. I don't see a really bad scenario here if things aren't settled by the spring of next year.
Brent Wilsey, thank you so much for your insight.